Hello everyone, welcome to the channel. My name is Fuller Kamara. Today I'm going to show you how to use the QuickBooks Online Advanced Revenue Recognition. We have an accounting standard which is ASC 606. So the ASC 606 has 5 criteria. First, you have to identify the contract, and then you identify the performance obligation, then you determine the transaction price, you allocate the transaction price, and then after you've allocated the transaction price to the performance obligations, and then you recognize revenue. So in this tutorial, we're only going to go over the 5th section, which is recognition of the revenue using the QuickBooks Online. The QuickBooks Online tool has made it very easy for you to recognize revenue. So first, in this video, I'm going to go over 3 aspects. First, the setup. We need to set up the products and services from the product and services section so that we can create a service for this. Then 2, we are going to recognize the revenue by creating an invoice. So after we've created the invoice, then 3, we are going to review our liability balance and also the income balance. Because at the end of the day, the total liability where we're going to credit amount that we receive from the customer for a payment for the 12-month period or maybe more than that. We're going to use this liability account to offset the revenue account. That is, every month QuickBooks will automatically debit the liability, which is the deferred revenue account, and then credit the revenue as we earn the income. Remember, the whole of accounting is we want to make sure we only recognize revenue after we have completed the earning process. Without wasting much of your time, let's get started. To access the setup process, that is the product and service section. So we can either go to the gear icon. So once we go to the gear icon and then select products and services, or we can just go to sales and then select products and services. So once we select services, in the service name, we can say yearly tax software subscription. And then we can scroll down on the description. We can still say yearly. So the sales price in this case is 1,500. And then the income account, we're going to select an income account. In this case, we'll just select services because this is our income account. So this income account is where QuickBooks will be crediting the revenue once the recognition criteria has been met. That is, on a monthly basis, QuickBooks will debit the deferred revenue account, which is the liability account, and credit this account. So now we can turn on, I recognize revenue for this product. So in this here, you can change this daily. If you select daily, like for example, if we select this daily, we go to the product and service section. This is where you turn on the revenue recognition. That is, if it was off, you couldn't see it when we go to the product and services. But for the fact that we have already turned it on, but if you want to change like the frequency, whether monthly, you can, this is where you change it. You can either say daily or monthly, but in this case, we will just keep it daily. So now let's go back. Once we check that off, we can select the liability account. So in this case, we will select deferred revenue. So this deferred revenue account is the accounts where the 1,500 will be recorded initially, which goes into the balance sheet because this is a liability account right now. But once we earn a portion of that, the amount we earn will be credited in the service income account and then debit the liability, which decreases this liability and increases the income account. So now the duration. So how long, for how many months? So since this 1,500 is a yearly subscription, as you can see, is a yearly tax software subscription. So we are going to spread it over 12 months because it's for the whole year. So we can only recognize the amount earned for each month after we have earned that amount. So that's why the service interval in this case is a monthly, but you can change this interval to daily, weeks, or years. But in this case, we want this amount recorded on a monthly basis. So now, after we finish, we click save and close. So now this is, as you can see in our products and services, this is the service that we've just created, which is the yearly tax software subscription. So now the next step now is to record payment and recognize the revenue over time. So in order for us to record payment and recognize the revenue over time, let's click plus new and then select invoice. So now we're going to, in this case, let's select the customer name. We can come up with any name. Let's just say Fulakama in this case. So this is just like you creating an invoice, right? You fill in all the details, the necessary details that you wanted to add. And when you go to the products and services, we click on this down arrow and select yearly tax software subscription. So once we select this yearly tax software subscription, then on the date, we can select the service date. It can be a current date or a previous date or historical date. So in this case, let's just say the service date was January 1st, 2024. We can change the description to anything that we like, okay? Best explain this transaction. But in this case, we can just leave the description as is, right? So now let's go to the next one. You can see the quantity. This quantity is the terms. For how many terms? So this is just for one term, right? And then the rate, this is all pulling from our setup, which is from the product and service. So now once we finish, we click save and close. So now after we've saved and closed, so let's go to the magnifying glass and look for the recent transaction. That is the transaction that we've just recorded, which is the invoice. So if we go click on this search, you can see on the recent transaction, we see the Fulakama, which is 2/18/2024. That is today's date. We click on that. So now it took us to this invoice. So you can see previously we don't have this view revenue recognition. So now after we've saved it, we have the option to view the revenue recognition. So once we click on view revenue recognition, it will bring this revenue recognition schedule. So as you can see, 31st January 2024, this is the balance we have in the liability account. And then the amount recognized is $126.79. Then on the income account, we also have the 126.79 because this is the first amount that we recognize as of the end of the first month, which is January 31st. Whereas on the 29th February, that is when the end of February, this is the balance that will remain on the liability account. And then this is the amount that will be recognized as revenue for that month. So now the total will be $245.40. So how did they arrive at this amount? This is just the 126 plus the 118. So that's the total that gives us this 245. So every month the income account will increase by the amount recognized, while the liability account will also be decreased by that same amount recognized. What QuickBooks Online is doing is just debiting the liability account and crediting the income. Remember, liability account has a credit balance. So if it's decreased, we debit it, and then if it's increased, we credit. So for income has a credit balance. If we increase, we credit. If we decrease, we debit. So when we debit the liability and credit the income, so at the end of the 1 year, which is December 31st, 2024, the total now will be 1,500 in the income account, and then the 129.85 will be the only amount for the month of December. And then whereas the liability account will become zero because we have moved all the amount to the income because we've earned the amount for that whole year. Okay, so that's why by the end of the year, you can see the 1,500 will be the amount in the income account. Whereas this deferred income account, liability account, will become zero. So next, now let's review the revenue recognition schedule. So we can review the revenue recognition schedule by going to the report and then search for revenue recognition. So this is the revenue recognition report. So as you can see, Here on 31st January 2024, we have 1,500 as the bill amount, the amount that we bill the customer. And then we recognize $126.79. This is the amount we recognize for January. And then in February, what happened? You can see the amount recognized will be this amount. We did not bill the client because we have billed the client with the total, but now the billing will be zero, but we are still going to recognize the revenue over time. So that's what we are doing. These are the amounts that QuickBooks recognize every month. You have the option to export this to Excel or CSV. Then you can run report and sync it in Excel as well. So what did we cover in this video? So in this video, we've covered how to set up a service that will be utilized in the revenue recognition in QuickBooks Online, and then at the same time record payments and recognize revenue over time, and review the revenue recognition schedule. Thank you for watching. I hope this video helps. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you.